In this video, we will analyze if Zbcn Coin can fall. Watch until the end so you don't miss anything. There was previously a distinct downtrend for the Zbcn Coin, but this trend was broken, and the price is currently making a retest following this breakout. A downtrend break usually signifies a change of direction in the market, with the potential for the price to begin a bullish move instead of a bearish one. However, a retest after a trend break is important to confirm the breakout. If the price starts to move up again after testing this level, it can often be a sign that a bull market has begun. It may make sense to take meaningful risks here. When we look at the price action, we see that it has been consistently forming lower lows and lower highs for a long time. This structure indicated that a downtrend was prevailing in the market and sellers were dominating. However, within this downtrend, the price unexpectedly changed the trend and suddenly started making a higher high and a higher low. Such a reversal can be a strong signal that the balance of power in the market is shifting. Higher lows indicate that buyers are no longer willing to let the price fall to lower levels, and demand is increasing. Higher highs, on the other hand, indicate that bullish momentum is gaining strength, and buyers are succeeding in pushing the price higher, from a downtrend to an uptrend. When we look at the price action, we see that there was a strong reaction from this order block that I've drawn, and a bounce upwards from here. This shows that this order block is working as a strong support area, and buyers are activating at this level and pushing the price up. Order blocks are often considered as critical zones, where the price changes direction and big players execute their trades. Therefore, when the price reacts here, it indicates that buyers are defending this level and see it as a strong demand area. If this bullish movement continues and the price continues to move higher, it will confirm that this order block is working as a strong support. However, if the price returns back to this area, it will be a critical point whether it will provide support again. The price may react several times from one order block. There is a distinct bearish order block at the top. When the price reaches it, it usually encounters selling pressure and may experience a pause. Bearish order blocks are levels where strong selling has occurred in the past, and large sellers have been active. Therefore, when the price reaches this zone, buyers may weaken, and sellers may re-engage and try to push the price down. If the price moves up to this order block, it will be important to see if there is a reaction. If there is a strong selling reaction, the price may pull back and head lower, but if it tries to break it a few times, it will weaken and eventually break it. According to the Elliott wave theory, the price seems to have completed the first and second wave so far. The third wave is generally considered to be one of the strongest and longest waves, and is expected to reach the 1,618 Fibonacci level as a minimum. As of now, the price has risen to this critical 1,618 Fibonacci level. This level is quite important because it can often work as a strong resistance or profit-taking zone. If the price encounters selling pressure at this point, we could see a short-term correction. However, if the price breaks the 1,618 Fibonacci level upwards with a strong momentum, this would signal that the third wave could extend further, and the price is more likely to move towards the green line, which has been identified as the next target zone. Remember that reaching 1,618 is the minimum target, which means it could go even further. When we look at the price from a broader perspective, we can see that it is currently attempting to complete a large cup formation. The cup formation is a classic technical analysis pattern that typically indicates a prolonged consolidation phase followed by a strong upward trend. This type of pattern forms when the price declines to create a deep bottom and then gradually recovers back to its initial level. At this moment, the price is continuing to shape the right side of the cup, and if the uptrend strengthens, the completion of the formation may become possible. In technical analysis, the target of the cup formation is generally determined by adding the depth of the cup to the breakout point of the formation's resistance level. In other words, if the price successfully breaks above the resistance of the cup, the theoretical target will be equal to the depth of the cup. However, it's important to remember that the completion of this formation takes time, and patience is key. There was a slightly ascending channel in which the price was moving. Such channels generally indicate a gradual uptrend, showing that the price is making higher lows and higher highs as it progresses. In recent movements, the price broke above the upper band of this ascending channel, making an upward move. Breaking out of the channel is usually a sign that buyers are becoming stronger in the market and that bullish momentum is increasing. Currently, the price is pulling back toward the broken level for a retest. This retest is crucial because if the price finds support here, it confirms the breakout as valid and increases the likelihood of further upward movement. Once the retest is complete, the price will be ready to continue its upward trend. Looking at the Bollinger Bands, we can see that the price previously reacted from the lower band and started an upward movement. The lower band is typically considered the oversold region, and reactions from here indicate that the market is being supported by buyers and may be entering a potential recovery phase. After this reaction, the price has managed to rise up to the middle band, where it is currently seeking equilibrium. The middle band generally represents the moving average, and reaching this level is a critical point in determining whether the upward movement will continue. Currently, the price is moving between the middle band and the lower band of the Bollinger Bands. If the price can break above the middle band, the likelihood of the upward movement continuing increases, and we could see a move toward the upper band. For this to happen, however, volume-driven buying would be needed. In the MACD indicator, although there has been a cross down from the top, the MACD continues to stay above the zero line. This indicates that the market still has a bullish tendency and that buyers are active in the market. Remaining above the zero line generally suggests positive momentum and implies that the price has the potential to continue moving upwards. If the MACD remains above the zero line and makes another upward cross, this could be a strong signal that the price might rise further. In other words, this could mean that the market is attempting a second attempt at an upward move. There's an uptrend in the RSI indicator, which suggests that the market is gaining momentum. In such a trend, higher lows are typically seen, indicating that the strength of buyers is increasing, pushing the price upwards. Currently, the price is approaching this rising trend line, meaning it is getting closer to touching this trend. If the price touches this trend line and finds support here, it could signal that the upward movement will continue, reinforcing the bullish sentiment. However, if the price falls below this trend line and breaks it, this could indicate a potential reversal or consolidation, so it's important to closely monitor the interaction with this trend line. If the RSI increases, the price is likely to increase as well. In the Vortex indicator, when the blue line is on top, it signals an uptrend and bullish pressure. When the red line is on top, it indicates a downtrend and bearish pressure. Currently, with the red line on top, there is a slight bearish pressure in the market. This shows that sellers are in control and there is a mild downward movement in the price. As long as the red line remains on top, the downtrend may continue. However, if the blue line crosses above the red line, it signals the beginning of an uptrend. The 200 EMA is currently quite far from the price. However, as time passes, the price will gradually move towards this level. The movement of the price towards the 200 EMA generally indicates the start of a balancing process in alignment with the long-term market trend. The 200 EMA is considered an important support or resistance level because it helps determine the long-term trend. If the price approaches the 200 EMA and attempts to break through this level, a retest is typically seen. This means that after the price breaks through the 200 EMA level, it might hover around this level for a while and test it again. Such a retest is crucial to confirm whether the price can truly sustain above this level. If the retest is successful and the price holds above the 200 EMA, a stronger upward move could follow, and the price could continue its rise from where it left off. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.